Bismillahirrahmanirrahim. We will start with the income approach. Let's recall the concept. Approach is the sum of 8 types of income, like compensation of employee property income, rental income of person, corporate profit, net interest, taxes on production, business, current transfer, current surplus, right? Compensation of the income is the income of workers. Property's income is the income of non-incorporate self-employed. Rental income of person is the income of person who own land. Corporate profit are the profit earned by corporate. Net interest is the interest earned by individual minus interest paid by individual. Taxes on production and imports include indirect business taxes such as sales tax, excise tax, business grant transfer payments are the payments made by business to individuals or government without making any payments of services or wages. Current of surplus of government supply sur- Current surplus of government enterprise is a profit of business that owned by government, right? In addition to the 8 component of national income, there are three accounts which we will discuss. First is statistical discrepancy. Second one is consumption of fixed capital investment, and then net factor payment. Statistical discrepancy arise because of we compile debt income from different sources. Depreciation, this is consumption of fixed capital is also called depreciation, right? If it is a value of wear out of capital that wear out, right? Uh, if you add all 8 of the components of income, you will get national income. If you statistical discrepancy in national income, you will get net national product. And if you add depreciation in net national product, you will get gross national product, right? Now, net factor payment can be calculated by subtracting factor income received from the rest of the world from to payment of factors income to rest of the world, right? It is a difference between the income received and the income paid to the other to the foreigners, right? If you get subtract added in GNP, you will get gross domestic product. Now we will discuss private sector and government sector income, right? For this, you have to write the expression private disposable income. Let me write it over here. Private disposable income. Private disposable income, which is equal to in GDP plus net factor payments plus transfer received from government plus interest payment on government debt minus taxes, right? So you can write these value in short form, right? Let's say private disposable income is equal to uh, P is equal to Y plus NFP plus transfers received plus INT minus taxes, right? This is private disposable income formula. You can get private disposable income with the help of this formula. Now we will discuss government income. It is very simple. Income is equals to taxes paid by private sector minus payment uh, from the uh, payments from the government to private sector, including transfer payments and interest payment on government debt. How could you write this expression? Government net government income is equal to taxes minus transfer payments minus interest rate paid to private sector by the government. Uh, Interest I and T is taxes, TR is transfer payments and INT is interest payment on government debt. I hope this is clear to you. Going back to our slide. This is the gross domestic product of Pakistan since 2009 to 2019 10 20. You can see the value of different sectors, their contribution, like agriculture sector, and industrial sector, services sector. If you add the gross value added, I mean value of A, B, C, agriculture sector, and B is an industrial sector, C is service sector, you will get GDP. Uh, and if you subtract GDP from, if you subtract taxes from GDP and add subsidies, you will get GDP. Uh, Sorry, total of GVA you will get after adding ABC. If you subtract subsidies from GVA and add taxes, you will get GDP. Then you have to add net factor payment from abroad, which is the income received and the difference between the income received and income paid to foreigners. You will get gross national product, and uh, you can see the values. It is increasing over the past few years, right? Now we will discuss saving and wealth, right? Income is an important piece of information to assess any economic situation. Um, what is wealth? For this, let's discuss wealth first. Wealth is the asset minus the value of liability. The economic well-being of a country depends not only on income but also on its wealth, right? Uh, um, the important determinants of wealth is rate of saving. In this section, we present some concept of aggregate saving and wealth and examine the relationship among them, right? Saving national saving rate of an economic unit is a saving divided by its income. And right now we will discuss three important measures of saving, like private saving, government saving, and national saving, which is summarized in this table. First, we will discuss private saving, which is the in private disposable income minus the consumption. We have derived this equation before, which shows the value of private disposable income. If you subtract consumption from this income, you will get private saving. uh, Government receipts government saving can be get if you subtract the government outlay from government receipts, which is the net government income minus government purchases, right? National saving is the sum of private saving and government saving. Let's try this equation. Uh, National saving is equals to saving, private sector saving plus government saving. Right? Uh, the value of private saving is, if you subtract disposable, if you subtract consumption from your income, you will get private saving. Let's substitute the value. Okay. And then you have to add government saving, which is equal to transfer minus taxes minus transfer minus interest rate. Minus government spending. Now, this transfers and this transfer will goes out. This takes, okay. Uh, this interest rate, this is in positive sign, this is in negative sign. So we'll get this value 0 now. This tax is, this tax and this tax will be gone. What you will get in the remaining, y plus NFP minus C minus G, which is equals to national saving. This is the same value which is written over here, right? What is the importance of private saving? Why we use it? Uh, it is used to fund new capital investment, provide resource the government needs to finance its budget deficit, uh, and acquire assets from a lend to foreigners, right? Uh, First, use we will now drive an important entity. For this, we will use our income expenditure identity and substitute the value of income expenditure identity in national saving uh, to get private saving in terms of for capital current account, right? For this, we have to again use word. Okay. The expression is already written here. What you have to do, you have to substitute the value of y, which is c plus I plus g plus nx, right? Just substituting the value of y and substituting the value of GDP over here and add, put the rest of the equation as it is. Okay. Again, this C is in positive sign, this is in negative sign, it will go away. This NX, I mean, this G is have in positive sign, this G have negative sign. So the on national saving, S is a national saving, right, is equals to I plus NX plus net vector payment. Instead of writing NX plus NF, you can write current account, which is the sum of net export and the net vector payment. Current account equals the payment received from abroad in exchange of goods and service produced, and minus the payment made to foreigners. Right? Now, our objective is to drive private saving in terms of in open market, right? So this national saving is a sum of private saving and government saving, right? If you can write national saving in terms of national saving plus government saving is equals to this expression, private saving is equal to I plus CA minus SPET. This is another private saving entity. It says that the private saving is used in three way. In investment, it can be used by investors, government in budget deficit, and for current account, right? To balance a current account. This is the importance of private saving.